Here it is, above $5 trillion for that market cap for Nvidia. Just yesterday, we were talking about Microsoft and Apple being above $4 trillion, and Nvidia says, hold my beer, and here we are at $5 trillion for that stock. Take a look at the price action here today. That was the market cap. Whoops, here's, I'll get there. I'll get there eventually, folks. Take a look at the price action. Nvidia shares are up 5.4% today. A couple of things that are contributing to this latest push higher. First of all, we had CEO Jensen Huang speaking yesterday at the company's first ever GTC conference in Washington, D.C., where they really emphasized the partnership between the administration and the role that sovereign AI plays in the push for data center expansion and the AI wave. And Wang also sort of intimated that data center revenue next year will be even higher than analysts had anticipated. That seems to be the chatter among analysts who follow the stock this morning. If we look at semiconductors more broadly here, beyond just Nvidia, we see a pretty big push higher. We also, by the way, had memory chip maker SK Hynix out of South Korea out with its numbers that topped estimates. So we're not just seeing Nvidia higher. Broadcom, TSM is higher, AMD, ASML, a few outliers here that are not higher, including Intel and Texas Instruments. But broadly, we are seeing this Nvidia effect lift the rest of semiconductors. Nvidia, officially the first company, hit a $5 trillion market cap. The rally in shares after a slate of reveals at its GTC event and on optimism for its Blackwell sales to China, or potential sales. For more, let's bring in Doug Clinton, Intelligent Alpha founder and CEO. Doug, it's great to see you as always. What do you make of this latest leg up in Nvidia at a time where there are all these questions about an AI bubble, and here comes Nvidia like, well, let's take another leg up here?
That's usually how it happens, Julie, as funny as that is to say. When everybody starts talking about, hey, are we in a bubble? I think counterintuitively, markets usually do the things that people don't expect, and that is they just keep going up, and Nvidia is leading the charge. I think that what we're seeing with Nvidia is the reality that none of the hyperscalers are going to stop spending on CapEx, building out the AI infrastructure that we've seen over the past year plus now. And I think that that's just being factored into Nvidia. The reality is that numbers will probably continue to go up from Nvidia. There's this catalyst maybe with China. Maybe China gets opened up for Blackwell, and that could be additional upside, but it just feels like all things are kind of going right for Nvidia right now and the AI trade more broadly.
I mean, the Blackwell question is indeed a maybe right now. We don't know if China and the U.S. are going to come to an agreement on that. So how pivotal is Nvidia? How pivotal is that for Nvidia? I mean, the shares had already been pushing up towards a record even without that news.
I think that it's probably not fully priced in. I mean, if I had to put odds on Blackwell, just the full out, the GB200, I think President Trump called it the super duper chip, kind of the high end chip. I think it's probably 10 to 20% that gets fully opened up at this point. And so if we did see that happen, I would imagine that Nvidia stock would probably go even higher. In the nearer term, though, this week, we will have earnings from several of the hyperscalers, and I think we're going to hear continued commentary around them not slowing down in terms of their infrastructure builds. And maybe that's sort of what the market is pricing in now, just getting a little bit ahead of that positive commentary.
Do you think that there will be any acceleration in spend from here? Or do you think it's more of, I mean, they're already huge numbers, to be fair, but do you think that it's a matter of maintaining that pace of spending?
I think some of the numbers are actually probably too low. If you look at the street CapEx numbers for Google and Amazon in particular, the street's at 12 and 9% for next year. And to put that into context, Meta, the street's expecting about 40%. So I think something has to give, and my gut is we'll probably see Google and Amazon talking about continuing to spend more. And I think those street numbers have to come up. It may not necessarily represent an acceleration, but I think it will represent a pretty strong continuation of what they've been doing.
Doug, what's also intriguing is the raft of partnerships that Nvidia announced during that Washington, D.C. GPT. I mean, everything from Uber to Lucid, we've got a list of some of them up on the screen here. Nokia, that was an interesting and surprising one. So there's the ecosystem continues to grow, right? Originally, we talked a lot about the circular economy with OpenAI at the center of that. And now you have all these other companies that aren't squarely in the AI business that are doing all of this. Does that mean that the potential for growth is expanding, or is it also that the potential for risk is expanding?
I think it's probably, Julia, an embrace of what these sorts of announcements, a partnership does for stock prices. I mean, I think management teams are acutely aware of the reality that if you announce a deal with Nvidia or OpenAI, you're probably going to have a pretty good day on the stock market.
Okay, so Doug, so that's a little bit of a cynical view, a realistic view, but like, so how real then is it? Like, you know, you've seen it's not just Nvidia. Like, people are saying, oh, you throw ChatGPT in an announcement and the stock goes up, but is it actually going to yield more profits for shareholders at the end of the day?
That's the perfect point, because that's actually all that matters at the end of the day. The way that we have thought about this whole circular economy question is, yes, there are a lot of partnerships. Everybody feels like they are entangled. But the only thing that matters at the end of the day, when we kind of look out 3, 5, 7 years from now, is does this technology create incremental cash flows that justify all of this spending? It's not going to do it this year. It's not going to do it next year. And no one should expect that. But I think when we think about that longer term picture, 5 and 7 years, ultimately that will be the determinant about whether these are good partnerships, whether these are good deals or not. I think that when we see ones with, an Uber, for example, Nvidia maybe is a little bit outside of that. But the question is just, what are we really going to see from a deal perspective? What can that really add to Uber's core business? And maybe there's something there that we're not aware of yet, but those feel like they're a little bit more on the very heavy optionality side versus the potential to add incremental value to the AI trade.
Gotcha. So that's a little bit more of a wait and see perhaps on that front. Another partnership that I want to ask you about that was solidified even more this week was between Microsoft and OpenAI, with OpenAI completing its recapitalization, restructuring, and them effectively being almost equal partners in the new structure. Does that mean for you, is Microsoft even more of a buy than ever because of that exposure and that sort of codified exposure?
Well, I'll tell you, Julie, at Intelligent Alpha, we use large language models. We're big believers in AI,
right,
and we use those models to do our stock analysis and portfolio management. Microsoft is a stock that our models like and we own. And so I think the reality is Microsoft continues to be probably the best direct exposure to OpenAI, which is obviously the best positioned, I think, AI company in the world right now. I think that this partnership and this announcement, it's actually sort of a win-win for both sides in a sense, where I think it unlocks OpenAI to kind of continue to raise additional capital. They're going to bring on other capital partners in the future because they have huge capital needs. And I think for Microsoft, obviously, they have as you mentioned, very large stake in what I think will probably ultimately be, another multi-trillion-dollar company in the next few years.
And of course, that multi-trillion-dollar company is coming public in the next few years also. It's too early for you to buy it as a public company, for any of us to buy it as a public company. But, what do you think that effect will be in the market? Like, does it sort of suck all the air out of the room from everything else when that finally comes public?
It'll definitely be a watershed moment, I think. And, in my view, I've always thought about boom cycles in a very simplistic way, which is when the IPO window really opens up, I think that's when you have to be thinking a little bit more conservatively, where that could be getting more toward the end. Now, OpenAI, they haven't gone public. And when they go public, I don't think that is necessarily the end of the AI trade. But what it could ultimately do is kind of open up the window for everybody else. And that's when I think I would really start to pay attention. I think there will be a huge amount of demand to own OpenAI for the long term. You'll have a lot of investors interested in doing that. But I think you'll also see, because of that demand, other companies will test the IPO waters, and likely we'll see a lot of other companies go public that aren't quite the quality of OpenAI, and that's when I think you can start to maybe really sound this bubble alarm that we're hearing right now in a more honest way.
I think you said in your notes to us that OpenAI is too big to fail. Is that how is that sort of a deliberate strategy on its part?
I don't know if it was deliberate at the outset, but it sort of seems that that's where they've been going. I mean, if you look at the partnerships that they have created now with Broadcom, Nvidia, AMD, it just feels like Oracle. I mean, everybody in the industry now is tied to OpenAI. They all have a vested interest in some way for that company to succeed. And so the way I think about this too big to fail concept is we get these questions about how can OpenAI continue to finance all these huge projects they're talking about. Well, the way they can continue to finance it is through all these partnerships that they've made and all these companies that have this really vested interest in supporting them and making the company successful. And so I think it's probably become part of the strategy is look, if we can get tied to everybody and make sure that everybody sort of needs us to succeed in some sense to keep the stock rally going, it almost could become a self-fulfilling prophecy. And I think Sam Altman is sort of smart enough to realize that.
And Doug, finally, going into these more of these big cap tech earnings, I know you guys don't own Amazon. Why not?
Yeah, it's been one that the models that we use at Intelligent Alpha, they haven't really liked it all year. And that has been the right call because Amazon has been the worst performer of the Mag 7 year to date. I think there's two things. One is just as a human observer from the outside, this recent layoff announcement, the timing of it just feels a little bit suspect. From a political sort of 101 standpoint, if you were going to have great earnings, you probably don't want to announce earnings or announce layoffs 2 days ahead of those great earnings. You'd probably want to wait a little bit. And so that just, it's a yellow flag, right? I might be looking too much into that, but it's just something that just doesn't sit well with me. The other thing, though, is AWS. And if you look at the growth in AWS, it was 17.5% in Q2. The street's looking for an acceleration now in Q3. And I think that Google and Microsoft have done an incredible job competing in the cloud space, really leading on AI, where Amazon, I would argue, is in third place, even though they're the biggest cloud provider. I think they're probably third place in terms of AI in the cloud. And I'm concerned that they might not quite meet that bar. And I think our models feel the same way, and that's why we haven't owned the stock.
Doug, it's always good when the computers agree with you, I guess. Thank you so much for being here. It's good to see you.
Thanks, Julie.
We're in a situation, demand continues to far outweigh supply, and that is something that we want exposure to. I mean, it's really unbelievable the run that you see. You look at Nvidia right now accounts for 8% of the S&P 500. We haven't seen something like this since the 1970s. So this is an area we want to continue to keep our foot down on the pedal. We do think a lot of the easier money has been made in the stock. We think looking down in the sub $500 billion market cap range and a lot of the AI infrastructure names probably makes a lot more sense, but still not a trade that you can take your foot off the gas pedal on.
And as maybe I'm just too jacked up on this Nvidia news, had a couple energy drinks this morning for the team's potluck. Maybe I'm just too excited. I actually got a little bit of sleep for a change. Am I too excited about this Nvidia story? We're supposed to be skeptical. I'm looking for holes in what Jensen said yesterday, but to me, he hit all the notes. Demand looks strong. They're innovating, and I don't know, I can't see who is going to challenge Nvidia. I know Qualcomm made its attempt early in the week, stock popped. I don't even see these companies on the same planet.
It's hard not to get excited. I mean, when you watched what he was saying, the massive growth with Blackwell, also the talk about robotics, that it is potentially going to be the biggest consumer product, and also for the industrial segment. When you looked at those images of factories with robots that were doing everything, when he talked about self-driving robo-taxis, I mean, it's just very, very difficult not to get excited about that. I will tell you that during that robo-taxi, I thought to myself, great, in 5 or 10 years, I don't have to drive my daughter to karate anymore. She can just get in one of those and that's it. I mean, you think about the implications of all of this, and it's very difficult not to get excited about that.
Wait, you trust autonomous, Inez? You're all in. So you're down.
Of course, we're in the East Coast, so we don't see it as much, but on the West Coast, it's much more prevalent. And so it is already here in 5 to 10 years. I would think that it is going to be all over the place.
Brooke, Inez decoding in real time why Nvidia is now at a $5 trillion market cap. She's jazzed up about autonomous cars. The more autonomous cars we get from Uber, of course, Tesla uses those Nvidia chips. It really explains what we're seeing in terms of a market cap with Nvidia and why it's worth almost $1 trillion more. I mean, I can't believe I'm saying this. Apple and even a Microsoft.
Brian, what we also heard was not only their partnership with Uber, but we also heard about a partnership with Lucid and also a partnership with an autonomous flight company, Joby. And so there's definitely lots of momentum around all the different implications that these key Nvidia chips can certainly play. And as you can see on the screen, there's just a number of others as well that they've been teaming up with. And it seems like this is really, and has been over these past few months, a key moment of such momentum for Nvidia. But Brian, important to point out that one thing I'm really waiting for is that Thursday summit between President Trump and China President Xi Jinping. I want to hear more about those chip exports to China and where exactly we stand there. And I wonder exactly how that go. Could that perhaps impact this momentum that we're seeing this morning, or could it lead to more?
Tim, last night I'm sitting down at a table, a media event, packed house, eating a free steak. It was all good. It was a beautiful event. Person next to me taps me on the shoulder. Brian, I wish I had gotten into Nvidia. I told my husband they should have invested in Nvidia last year. What do you tell investors that have completely sat out this Nvidia rally, believe it or not, thinking that the stock is overvalued? What do they do today?
Well, Brian, we're hearing this constantly from our advisor base, and they're getting calls from their clients, their older clients. Hey, why don't I have more tech? Why don't I have more Nvidia in their portfolios? And it's tricky because a lot of them haven't been in. They haven't captured this huge run-up. So our thought and our approach right now is getting into this tech trade, getting into Nvidia, but keeping risk management a focus. So we continue to see our advisors gravitating to strategies like the managed floor ETF QFLR, where you have that exposure to the NASDAQ, but you're limiting losses to roughly 10% on the downside. That type of strategy is incredibly important in this type of environment where you're talking about a $5 trillion market cap. Yes, everything looks rosy right now. There's a heck of a lot of demand out there, but at the end of the day, at this type of valuation, this type of market cap, there isn't any bad room for bad news, Brian. And there hasn't been any bad news really up to this point. But you still, as an investor and as an asset manager, we need to make sure that we are preparing for that, and that is critically important right now with the run-up that we've seen.
Tim, tough question here. What is safer, a U.S. Treasury or Nvidia stock? No, I'm just kidding. I don't answer that. No, it's totally joking around, Tim. You don't have to answer that. But really, in the same vein, what is more important to markets here? Is it another rate cut, or is it that a company like Nvidia crushes it at every event they continue to have?
I think the AI infrastructure trade has to keep going. You have to continue to see that narrative playing out. And in our view, any narrative that comes out that is contrary to this demand, it is the biggest risk to this market at this point, just given how much excitement, how much good news is priced in, what this has done to valuations. It really leaves very little room for bad news to creep in. You think back to last year, the DeepSeek news that we saw come out, you saw how violent of a sell-off we saw after that, as it was something that went against the narrative. So risk management still needs to be front and center, Brian, right now. We think that is so important. Yes, you want to continue to ride this, but don't forget about that risk management component.